Financial markets aren't just about numbers and charts. They're really about the rhythm of the global economy. And if you can understand that rhythm, you can move one step ahead of pretty much everyone else. Today, we're going to zero in on a very specific moment in that rhythm, a moment that most people see as a problem, but it's not. It's when the US dollar weakens. And this isn't a sign of trouble, it's one of the greatest opportunities you can find in the market.
So you might be asking, why? Why is this one signal so incredibly powerful? Well, most people, they just dismiss a weak dollar as another boring headline. But for those who actually know how to read the market's language, it's one of the most potent, it's a leading indicator you can find. It's basically the market telling you that a massive shift in global money is already happening. The trading legend Paul Tudor Jones put it perfectly. He said, the market tells you what's happening before it ever becomes news. You see, a weakening dollar isn't the start of the story. It's the result of a whole chain reaction that's already begun. Maybe a shift in Fed policy, inflation cooling down, or the economy slowing. It's like the market is whispering a secret, but you have to know how to listen. And let's be absolutely clear about something. The US dollar is not just another currency. It's the lifeblood of global trade. It's the reserve currency for central banks all around the world. The best way to think about it is like a lighthouse for the entire financial system, guiding these immense flows of international capital.
So what happens when that lighthouse starts to dim, even just a little? Well, the entire fleet of global capital, we're talking trillions of dollars, it changes course. Money flows out of US assets, and it starts looking for higher returns or just greater safety somewhere else. And this single shift, this one change, it creates these powerful, predictable trends in other assets. This is where our opportunity really begins.
Now, you might be thinking, okay, that's a nice theory. But this isn't just a theory, it's a historical pattern. A pattern that has repeated itself with, frankly, incredible consistency. It's what I call history's golden rule, and it's edged right into the market's DNA. Just look at the tape. The pattern on this timeline it's just undeniable. Between 2003 and 2007, the dollar fell almost 40%, and what did gold do? It more than tripled in value. Then again, from 2009 to 2011, the Fed's quantitative easing was weakening the dollar, and boom, gold surged to a peak of $1,900. And most recently, in 2020, that sharp dollar drop sent gold to yet another new record. The cycle couldn't be clearer. When the dollar falls, gold rises. And this is a really crucial point. You have to understand that gold is more than just a shiny commodity. It pays no dividend, it doesn't represent any business, its value is purely psychological. It is a 1,000-year-old store of trust that acts as a barometer for fear and, for waning confidence in the world's main currency. So when the dollar weakens, gold is finally liberated. It's like a compressed spring that's just been released. But gold isn't the only thing that shines when the dollar dims. Nope. There's another, often overlooked beneficiary in all of this, a country whose currency has this surprisingly intimate connection to this entire cycle. And I am talking about Australia. You see, Australia is a commodity powerhouse. Its entire economy is deeply tied to exporting natural resources. Things like iron ore, copper, coal, and what's crucial for our story especially, gold. As one of the world's largest gold producers, you could almost say that Australia is, in a sense, the world's vault. Okay, so let's break down this chain reaction, step by step. First, the US dollar weakens. That makes gold cheaper for anyone holding other currencies, which drives up demand, and in turn, the price of gold. Now, because Australia is a top gold exporter, its national income literally surges. That economic strength makes the Australian dollar, the AUD, way more attractive to global investors. And what's the final result? The AUD/USD currency pair, it soars. It's just a clear, logical progression. And this really illustrates a timeless piece of wisdom you hear from professional traders, guys who've been in the game for decades. They'll tell you, if you want to know where the Aussie dollar is heading against the US dollar, don't just stare at economic data. Look at gold first. It's the ultimate leading indicator for this whole cycle. So understanding the mechanics, that's one thing. It's important. But to really capitalize on this, you have to understand the psychology that drives the market. And listen, this isn't about being the smartest person in the room. It's about understanding how the crowd thinks, and even more importantly, how the crowd feels. And this really contrasts the two mindsets perfectly. On one hand, you have the mass market. They're reactive, they follow headlines, they're driven by fear, and they're almost always late to the party. But the professional trader, they're proactive. They don't follow the news. They follow the underlying cycle. They see the signals before they become headlines, and they position themselves way ahead of the crowd. I'll never forget this trader back in 2017. The dollar was just starting to show a little bit of weakness after being strong for a long time. And while everyone else was distracted by all the noise, this trader made this incredibly bold declaration. He said, "This year, I only trade one thing, AUD USD, and I will only buy." You know what? People thought he was crazy, but he wasn't guessing. He saw the cycle turning before anyone else did. Of course, his conviction paid off big time. But that's not even the most dramatic example I've seen. Just look at this number for a second, $280,000. This number, this represents the real-world potential of understanding and acting on this single powerful cycle. So back in 2020, a 26-year-old trader took a $10,000 account and turned it into $280,000. And he did it in just 9 months. Now, he didn't have some complex algorithm or secret inside information. His secret was extreme focus. He saw the dollar weakening as the Fed cut rates, so he traded only two things, gold and AUD/USD. He just rode the massive trend that he knew was coming. His strategy was it was profound in its simplicity. He actually said, "I don't try to guess the bottom or the top. I just follow the money flow when the USD weakens." See? He wasn't trying to be a hero predicting every little twist and turn. He just identified the macro trend, the direction of the river, and he swam with the current. So all of this brings us to the most practical and important question of all. How do you recognize this cycle before it becomes obvious to everyone else? How do you turn this knowledge from just a signal into a concrete, actionable strategy? Well, this is your checklist. This is the playbook. These are the 6 key signals that the big institutional traders are always watching for. Number 1, the Fed changes its tone, starts slowing down rate hikes. 2, inflation starts to cool off. 3, U.S. Treasury yields begin to fall, which makes the dollar less attractive. 4, the dollar index chart physically breaks its long-term uptrend. 5, gold smashes through a major resistance level. And finally, number 6, the AUD/USD pair breaks out of its long-term range. These aren't random events. They're like dominoes, falling in a very predictable sequence. And this right here helps us quantify the opportunity. When you see 3 of these 6 signals align, think of it as a warning shot that the trend is changing. When 5 of them appear, now you're looking at what I call a diamond opportunity. It's rare and extremely valuable. And when all 6 align, well, the cycle is in full force, and you simply cannot afford to be on the sidelines. And here's the really crucial point. These setups are rare. A clear, undeniable weak dollar cycle might only happen 2, maybe 3 times a decade. But that rarity is precisely what makes them so powerful. When the market gives you a gift like this, a clear, macro-driven trend, you have to be prepared to act with conviction. At the end of the day, success in the market isn't about having the highest IQ or the most complex strategy. It's really not. The market doesn't reward the smartest person. It rewards the person who best understands the dominant trend and who has the discipline to actually ride it. In all of this, it leads to one final essential question. It's the one that really separates the reactive amateur from the proactive professional. So ask yourself, are you trading the noise, the fleeting headlines of the day that are gone tomorrow? Or are you taking a step back to trade the great, powerful cycles of the world? Because when the dollar weakens, it's not just another news event. It's the entire global financial system changing direction. And that is a current you absolutely want to be swimming with, not against.